Hey guys, everything new in the sun here. I want to do a video about Deutsche Bank. I think they're kind of the biggest thing in the news right now, and the biggest potential trigger of economic collapse. This one's from silverdoctors.com. Jim WIllie, if Deutsche Bank goes under, it will be Lehman times five. Lehman Brothers. The Lehman Brothers that was the bank, the institution that really kicked off the 2008 crisis. I think it happened like November or something back then, and it really kicked off what led to the complete crisis there. With Deutsche Bank forced to issue a statement defending its liquidity today after stock crashed 10% to financial crisis lows, and this was the date of this is February 14th, implying that a 70 trillion derivatives book may be on the verge of collapse. We thought it was apropos to revisit Jim WIllie's dire warning that if Deutsche Bank goes down, it will be Lehman Brothers times five. Now, I spoke in my other videos about the money pyramid with the derivatives on top being $1,600 trillion, and the total output of the world for a complete year, the total GDP is about $55 trillion. And so the derivatives is way oversold, gambled, and it is waiting at the top. There's nothing backing it. There's no real value, real assets backing anything about the derivatives market. So if interest rates go up even a tiny bit, that would trigger a collapse. And if confidence falls or the market starts dropping, that would trigger a collapse in the derivatives market. A bank failure contagion, that's what's going to push the price of gold way over 2,000 an ounce. So now we're talking about silver doctors, so they're interested in gold and silver. By the way, if I zoom up here at the top of their page, they have the silver and gold markets. So silver and gold are up a tiny bit today. Gold at 12.32 and silver 15.41, and it's getting expensive. I mean, it wasn't that long ago when it was well below $15, and so precious metals are getting expensive. The price of silver is going to be moving over $100 from its $15. Let me show that again. It's $15 right now. He's saying the price of silver will be moving over $100, and the price of gold is going over $5,000. So many times increase in the value of the precious metals there. A failure of Deutsche Bank would trigger systematic banking contagion, the likes of which the Western world has never seen. With the Eurozone banks showing renewed signs of crisis, Deutsche Bank deleveraging by a massive 425 billion euros over the past year, the fastest pace since 2011 near euro collapse, and Barclays admitting a 12.8 billion capital shortfall, and fundamental indicators in the gold market screaming financial crisis. The doc spoke with Jim WIllie Tuesday in an explosive must-read interview. WIllie recently stated that Deutsche Bank is under major duress and could be the first major bank to collapse in the next stage of the banking crisis. When asked by the doc how Deutsche Bank differs from Lehman Brothers and what events could lead to a renewed banking crisis, WIllie responded, "My best German source informs me that three major banks are in trouble, and these three banks are fighting over every single night to fight off insolvency and failure." So they're actively working on this, trying to stay afloat, basically. He says Citigroup in New York, Barclays in London, and Deutsche Bank in Germany every single night are in trouble. The important thing to keep in mind about Deutsche Bank is that it won't go down alone. If it goes down at all, if it fails, it will take along with it 3, 4, 5, 6, 10, 15 other banks. It will be one or two quickly, then the third or fourth a few weeks later, another, then before you know it, all of Italy and all their major banks would be kaput. My belief is that Deutsche Bank and its constant overnight risk of failure is somewhat tied to derivatives related to LIBOR and also risk related to the Forex derivatives. In other words, derivatives that the banks use to balance off currencies. And obviously I've spoken about the derivatives a lot. The article is long. I'll just read a few more lines here. Believe it or not, in the derivatives world, gold is treated like a currency. Isn't that ironic? And he's it's kind of a wink-wink, sarcastic sort of a thing. The forex derivatives that the banks are involved in are very much tied to gold. The big immediate threat for Deutsche Bank, though, has to do with their problem of hiding debt for the sovereign nations applying for the Eurozone. For example, Greece and Italy couldn't have their debt ratios over certain levels. So what Deutsche Bank did was they turned nice big chunks of sovereign debt into currency swaps. For example, of how this works, suppose you have $250,000 bad business loan that is sticking up your credit report. So you call up your favorite Deutsche Bank or Goldman, Morgan, pick your criminal enterprise that is your personal favorite, and you tell them, look, I have a $250,000 debt here and I want to make it go away. They say, okay, we can do something clever here. We can pay off your debt so your credit report looks good. We can establish this $250,000 euro swap and we'll keep it off the books. So you have this $250,000 bad loan sticking up your books goes away and is replaced by something hidden, a Eurozone currency swap. That's precisely what was done on a larger macro scale by Greece, Italy, and Deutsche Bank is involved in several of these. The total that is becoming disclosed is 400 billion. Apply your typical ratios and you can conclude that they are over 10, 15, 20 billion short of capital requirements. So Deutsche Bank may or may not be too big to fail, but can they print money off like they did in 2008 again to stave off the collapse of the too big to fail banks? Basically what happens is they're rigging the numbers, making it look like the countries being added to the Eurozone are solvent, and they aren't. And but they're not doing anything with the actual debt. The liability is still there. They're just putting new names on it, wrapping it up in bows, and doing some other things with it. They're betting big. We had events in April, May, and June in which 5,000 metric tons of gold were lifted out of London. Eastern entities were angry that their gold had been leased and rehypothecated. The London banks used the Easterners' gold as equity for futures contracts that went bad, like in Spanish, Greek, and Italian debt. Deutsche Bank CEO could not withstand an assault on the office to retrieve data, even though he appealed to several high-level politicians. Fast forward to July 2013, and we are now seeing several Deutsche Bank vice presidents being indicted under several fraud charges, and they're almost all cooperating with Interpol. They flipped to corporate with the serious fraud division of Interpol. And he goes on here, and there's a lot of fraud. Obviously, there's a lot of shifting of and creation of derivatives and other methods to cover up things and to bet more money. And it's a bad situation. Go to silverdoctors.com, read the article. It's long. You got to take it with a grain of salt. Obviously, Jim WIllie doesn't know everything, but if you put all the information together, I think it adds up to be something that is astounding, and it does make sense to me that it's occurring. So I mean, if you're a precious metals person, you need to be in now, and I wish I was able to get some. Just don't have the money, but it is a wealth preservation technique, and all the smartest people in the world do it. They hold a percentage of their holdings in gold and silver, and if those people are rich, usually for a reason. They know what's happening. They're smart. They're wise with their money. They recognize that gold and silver is true money. Back in 29, I think it was just after 29, they did actually went and confiscated gold and silver because the central banks wanted everybody to have full confidence in the fiat currency, the worthless paper dollar that was basically an IOU. And so gold and silver was confiscated. I think that happened a couple times in history. But it's because it's confiscated because the government knows that it's valuable and worth money, so they have to make it illegal to own it. Otherwise, people would just keep collecting it and hoarding it, basically. And I'm reading in conclusion here. In conclusion, Deutsche Bank owns 25 trillion in OTC swaps with the central bank and other major banks. So expect a daisy chain of derivatives failures. And everybody's saying the derivatives are what's going to really be the trigger point. They are going to absolutely collapse when people start getting out of derivatives and just once things start moving, that's going to pull down and just wreck every single bank. Daisy chain of derivatives failures for the 1.6 quadrillion derivative market. That's the 1,600 trillion derivative market. If it were to fail, Deutsche Bank cannot break down by itself. It would result in complete breakdown of European monetary union. And you need the European monetary union to break down if we move to a single one world government and one world currency. So this is exactly on track prophetically for what's going to occur. In today's world, when a big bank dies, they merge them with another big bank, another European bank, potentially Barclays. I think we're going to see massive amounts of money flooding into gold. A bank failure contagion, that's what's going to push gold way over $2,000 an ounce again. Silver is going to be moving over $100, and gold is going to be over $5,000. I am certain of this, as I am that the sun will rise in the east in the morning come January. So we know it's pretty much inevitable because they're suppressing the price of gold and silver with the paper markets. And so it's pretty much inevitable that the price of gold and silver are going to increase. And I don't even think you have to be following Bible prophecy or even the markets necessarily to recognize that historically the price of precious metals is low right now, very low. So, you know, and because it's always been a good wealth preservation thing, it's always been worth money, that gold and silver makes a lot of sense right now. Even if nothing happens, or maybe something happens 2 years from now, we don't know when it's going to happen. But savings in gold and silver does seem to make a lot of sense. It's been money, gold and silver's been money for 5,000 years of human history. I mean, if you want to be a good steward of what you have and you have some extra to save, then, and all of us save for retirement, it's a good idea. Don't take my word for, don't take my advice. I'm no financial advisor, but in the information I'm seeing, at this point in time, with the markets so sketchy as they are, I believe personally it would be a bad idea to have a bunch of savings in the markets. And, it would be much better to have savings in assets, even though you may not get an increase on the investment in hard assets that you would play in the markets. I think the markets are prepped and primed for a crash, and you don't want to be in that. So that's the update on Deutsche Bank and my thoughts on savings and such on precious metals. Thanks for watching, guys. Talk to you in the next video.